Good morning, everyone. Welcome back to the Clubhouse Insider. It's Monday, January 26th, and it is 14 degrees here in North Texas. Everything is closed, but not the markets. So we're heading into a really important stretch for the markets. This is Fed week. So the Federal Reserve will be meeting, making a decision on the benchmark rates, the federal funds rate, decision to come Wednesday. Right now, headed into Wednesday's meeting, mortgage rates are sitting near 10-month lows with recent 3-year lows, but last week a little bit backwards on us here. As you can see, the 30-year went back to 6.1. It was showing a 6.0 here for a while, but FHA, VA rates still in the fives. Things are overall coming down, as you can see here. But if you look just January of this year, you can see that we've had a little spike. So trying to find some new levels. So it's really important to know that going into this Fed meeting, that Fed rate cuts do not directly and automatically cause mortgage rates to drop. Mortgage funds or mortgage rates can move on expectations, things like inflation data, the bond market, and not that federal funds rate that the Fed controls itself. So we saw this clearly at the end of 2024. Rates dropped. And again last year too, at the end of 2025, rates dropped heading in, and then rates actually rose after the market had already priced in the cut. So oftentimes the markets love to guess, love to anticipate, and that's what they're going to always constantly do. So looking ahead at a future cut, some say September, later, some other time this year. We just don't know for sure. Everything is going to be going off of things like the data, right? So CPI, PPI, PCE, jobs report. These are the things that come out monthly that affect jobs, the overall economy, inflation, and that's what's going to tell us what's going to happen next. But the other things that we're really watching for during a Fed week is the commentary. So Chairman Powell, who's chairman for now, will stand up there. He'll talk. He'll be on the microphone, and what he says, whether it's doom and gloom or whether it's positive, that can affect the market. So lots of little things can affect the interest rates. Here's a look at the 10-year Treasury. See, there's the same kind of spike, right? When you're looking the news every day, if there's no commentary, the other thing that you can look at is the Treasury. But anyway, the language really matters. This week, there is no rate change expected. You can kind of do a quick Google here. This is a fun thing to read here. What investors want even more than an interest rate cut. So there's just so much more than just the federal rate or the federal funds rate cut or not that goes into all this. It's not supposed to be political, but there is tons of different data and things that go into it. And there's some politics coming too, because there's speculation that this week could be the first time we hear the new Fed chair's name. So the announcement of who might replace Jerome Powell in 2026 as the Federal Reserve chair. That could add some volatility, good or bad. So anyway, here's the practical part of all of this crazy rate stuff. Is rates have come down enough that borrowers over the last couple of years, especially if you have our interest rate in the high sixes and above, or anyone in a temporary buy down that utilize one of those, and it's about to adjust. There is real opportunity right now. So this part matters as well. Not a lot of people are going to talk about this while they're trying to sell you something on one of those spam calls you receive, but some refinances could absolutely be impacted by home values. So in certain areas, even here in Fort Worth, in the DFW area, there are values that are lower than they were 2 and 3 years ago when the home was originally purchased. So this can affect whether or not your PMI can drop off, whether or not PMI might need to be added, or whether there's enough equity to roll in closing costs into the loan. And let me say clearly, there is no such thing as free refi or no closing cost refinance, no matter how it's marketed, because that's exactly what it is. It's just marketing. There are always costs. They exist somewhere. So don't be misled. If you have questions, ask, do your homework, and then call me. I'll check your work. And even if now is not the right time to move, which in my clients' cases, there's a lot of clients where it's not the right time just yet, even though the rates are better, the equity position might not be what we're looking for to put the entire package together for their long-term plan. So we can map these things out for you, help you save money later or prepare ahead of time. But the bottom line is rates are better, opportunities do exist, but the details really matter. So that's today's Clubhouse Insider. Have a great week. Stay warm out there. Be careful if you're on the roads, and we look forward to helping you. And please, if you have any questions at all, make sure to give us a call. Thank you.